We've got a policy to pay out 50 to 80% of net profit after tax to our shareholders, and we've said that we will target the upper end of that range. And as you said, with this outstanding performance for the first half, with our net profit after tax up 66% compared to the same period last year, that certainly gave us the opportunity to pay at the top end of that range at 80%. So we've got a 93% increase in our interim dividend to $1.47 per share, and that is the single biggest dividend in the company's history.
When you're looking ahead, say, for example, for the next 6 to 12 months, and you see, we've seen this incredible price surge when it does come to iron ore of late. You've got a number of projects to really increase your fines as well, or the percentage fines. Do you think that we're going to maintain this stickiness at this, I suppose, inflated level when it does come to iron ore over the next 6 to 12 months?
Well, I never like to predict the iron ore price, which is why we stay very focused on the things that we can control, which is operating excellence and having an industry-leading cost position. So we're a very low-cost producer. Having said that, we continue to see strong demand for iron ore in China. We're also seeing that the ex-China markets are recovering back to pre-COVID levels. And of course, at this time of year, there is always some concern about supply disruption, particularly as a result of weather, both from Brazil and from the Pilbara region of Western Australia. So we're seeing very strong fundamentals at the moment, strong ongoing demand for iron ore. China's crude steel production was at 1.05 billion tonnes for the 2020 calendar year, and that was up 5.2% compared to the previous year. So we are continuing to see that strong momentum in crude steel production that's driving that very strong demand for iron ore.
Now, Elizabeth, I have to ask, there was obviously, the market is aware of the issues that did hit at your Iron Bridge project. You've announced that you're going to be conducting a full review. You've taken steps in order to ameliorate some of the issues there. So in terms of that project moving forward, are you confident, despite the blowouts, that it's still going to be actionable and really beneficial when it does come to not just your iron ore mix, but your profitability moving forward?
Well, one of the things about the Iron Bridge project is we had a stage 1 project before we actually announced the stage 2 final investment decision in April 2019. So in stage 1, we actually invested $500 million in developing a pilot and demonstration plant. So we have actually produced the magnetite concentrate. We have de-risked the technical process flow sheet, so we know that it will produce a high-grade magnetite concentrate product. We're now taking this opportunity, given some of the pressures we have seen on cost, whether that's due to labour mobility as a result of COVID-19 impacts, some of the pressures on market rates and the like. So we're taking the opportunity just to take another commercial and technical assessment of the project. But underpinning all of that is we are absolutely confident that that project will deliver a high-grade magnetite concentrate product.